Hello traders and welcome to another edition of Stockwatch. So as we kick off the trading week, we're just digesting a little bit of news that was coming out of the back end of last week with oil, as it actually had quite a descension for the first few days of the trading week, but then picked up after the IEA did say that they were worried about a supply coming in the next few months. Well, the reason that we had such a downturn in the first place was there were hopeful peace talks between the Ukraine and Russia on Monday, Tuesday and Wednesday, which saw three negative days for oil, starting pushing further down and broke the $100 handle. But however, now from the morning session, we're looking like it's going to pick up and actually reach 110 once again. And then we'll see if the V-shaped recovery will be completed by the end of the trading week when we get back up to roughly about $125, $126. So this is the kind of targets we're looking at for the rest of the week. But just keep an eye on all the fundamental headlines. As I said, the EIA and IEA are looking to say that they're at a crossroads for the next few sessions for oil after the invasion of Ukraine, and also 3 million barrels of Russian output of oil is going to be lost every day from April because of these sanctions. And OPEC and the UAE are not looking likely to start helping relieve this pressure, and they're not actually going to supply or increase output apparently. And even Morgan Stanley revised its 2020 forecast from $100 to $120 a barrel. So these lockdowns in China as well are also might be taking some effect on oil, as supply and demand might diminish once again. We heard that India is going to be buying cheaper barrels of oil from Russia, but that might not relieve some of the pressure for the global demand as well. So we're seeing now a bit of an uptick on oil, and it could keep pushing even further as we take a look on the charts. So at the moment, what I'm looking at here, we're coming up to 110. And this is quite a big psychological area, because I think if we break this, then there's no reason why we can't have another leg to the upside and then testing these fresh highs once again. The Russia-Ukraine conflict does not look like it's slowing down anytime soon. These peace talks that were apparently in place last week are not going to be in place again for a while after we see the recent news on all media outlets. So that's really driving oil at the moment. As you can see on the RSI, we are looking for another leg to the upside. And if it gets overbought again, then we could be in for a slight divergence and another leg lower for now. But in the near term, in the next week, as I say, by the end of the week, we're looking for another push to the upside if things get out of hand and start getting very erratic for oil as well. If we're looking on the near term 4-hour chart, just remove some of these drawings so it's a little bit easier to comprehend. We are now piercing the Ichimoku cloud, the lower border, which is quite significant because, as I said, with the Ichimoku cloud, it gives good indications on when the entry and exit points are. If we do start piercing clouds, it's a big engulfment, then prices could stay engulfed for a while. As I said on the daily chart, we could be looking for this kind of maneuver and then another leg higher. So just keep an eye out, as I say, for all fundamentals. If we get this V-shaped recovery to the recent fresh highs, it won't be out of the question if it happens by the end of the week, especially as I said on a previous Stockwatch video last week, it could be the calm before the storm. We have a dip in prices before it goes really, really high. And this is what's really driving oil at the moment. And we can't look at oil without looking at gold from the morning. We're having a bit of a consolidation at the moment, but if we pull it back to the daily chart, as I said before, it's pretty much trending a little bit like oil is. It's following the same movements with the potential peace talks that we had in last week's trading session. We saw this very monumentous drop over, almost $100 move. And now we're just consolidating, waiting for the next opportunity to see if we're going to have another leg to the upside or downside. At the moment, it could go either way, but if we're following how oil has been going in the last few trading sessions, then it looks most probably like it's going to follow the same route as oil as well. If we're taking the 4-hour chart, take a look on the 4-hour chart, then at the moment we're in this kind of downward channel, but as you can see here, very, very choppy at the moment, and it's just waiting for the next direction and the next bounce. Not getting many signals from the RSI or MACD or other indicators that we use here, so we're just waiting to see what the next cause for concern is, and if we can move away from these recent bottoms. Obviously dropping below 1900 will be a big psychological disadvantage for bulls. However, we're looking to see if we're going to start moving into the Ichimoku cloud engulfment, and then a bit like oil, staying there for a little bit before we have another surge, possibly to the upside. So as I said, keep an eye all the fundamentals as we kick off this trading week, and tell us what you think on our YouTube channel when we post a video. Any comments will be got back to as soon as possible. So have a great trading day ahead, and we'll speak tomorrow. Bye for now.